Greetings, members one and all of the Salivation Nation. Silver took a beating today, and it's not for the reason that you may think. This is not a correction, but we're going to talk about what it is that caused silver to go down so dramatically today as we explore. Silver's price really did an unexpected turn just before Thanksgiving. The silver price soared up fairly dramatically in one single day. And that's just it. When I say that the silver price soars, it's based off of the time frame. A dramatic move above 2% I consider as a price soaring. When it plunges just as dramatically in the opposite direction, in this case over 2%, that is also very big news. And when it's down over 50 cents on the day, in fact, that's where it is now, over 50-cent drop in one day. But it got below 2.5%. It was below $21 for a brief amount of time earlier in the day. But there's a lot going on to unpack here for silver's price movement in the negative territory. Part of it is driven by gold. Gold also went down today. But let's talk about these reasons. I'm going to be referencing an article here from Reuters that talks about this. But we know that there's other things that are happening too. But it's not a correction because usually that's what happens. When the market goes up dramatically, there tends to be a correction in the market to the other side or normalization of prices. The gold prices slipped from more than a week high on Monday as the dollar rose from session lows on hawkish comments from members of the U.S. Federal Reserve reiterating their fight against inflation. So psychology is pushing it to some level, but that's not the biggest reason why silver's price especially plunged today. But U.S. gold futures are settled down as well as spot gold. The dollar is just off the high of the day. We saw some U.S. equities selling off, and James Bullard seems to be quite hawkish from the Federal Reserves. This is according to Philip Streibel, who's a chief market strategist for Blue Line Futures in Chicago. The dollar turned positive after falling to a near 2-week low earlier in the session. Stronger dollar means greenback price metals make more expensive for other currency holders. And typically that weighs on gold and silver. Fed Presidents James Bullard and John Williams stated that there was a long way to go to fight inflation, with Bullard stating that rates should be held high throughout the next year and into 2024. So he's saying that that's what should happen. Now, those are just two of the governors that say that. Benchmark U.S. 10-year bond yields also edged up from near 2-month low. Gold is highly sensitive to rising U.S. interest rates as they increase the opportunity cost of holding non-yielding bullion. Jerome Powell is due to speak at a Brookings Institute in the middle of the week on Wednesday on the outlook for the U.S. economy and the labor market. And we'll see what he says for hints to where we could see the metals take a turn for the worse or maybe an uptick, especially if what he says contradicts these statements by Williams and Ballard. Also on the radar, U.S. non-farm payroll data for November is due on Friday, which might shift expectations around the Fed's policy move in December. Traders currently anticipate a 50 basis point rate hike. About 80% think that's what's going to happen. And I am of those that think it's going to be just a 50 basis point hike. Not any lower and not any higher. So silver has fallen to 3% earlier in the day to $20.94 for the ask price. Demand for silver could be lower amid protests and lockdowns in China, as silver is mostly an industrial metal, highlighted Blue Line Streibel. And that's the big news here, folks, is silver is being affected by what's going on over there. The lockdown protests, very dramatic what's happening there. We've not seen anything like this happen in China since the Tiananmen Square situation. And we don't really know exactly how big those protests were because a lot of information was squashed. In fact, we really didn't find out about it until after the fact. But with the internet age, now we are seeing what's happening with demonstrators and police clashing in Shanghai as protests over China's stringent COVID-19 measures flared and spread to several cities. It is having an effect on the markets. The Dow Jones Industrial Average is down over 1.4%, down 497 points to 33,849. The NASDAQ is down over 170 points to just above 11,000. The S&P is also hurting at over 1.5% drop as well. The dollar index, though, is still up, and so that's what's affecting it. But these Chinese lockdowns could be shape-shifting for the Communist Party as they're in China. They are calling for resignations of Xi Jinping and the top leaders there, and that could put an effect. That could have and that's obviously hurting the yuan and strengthening the dollar. And but not only that, it's hurting silver, because silver is widely used in industry and widely used in manufacturing in China. And so if less demand for silver, just as we saw during the pandemic, and means that it's going to weigh in on the overall demand for silver in the medium and short and medium term, which means that silver's prices could suffer because of it. They already are. So this is not a correction. What we are seeing here is a dramatic shift here in policy, especially when there was talk not long ago about relaxing some of these policies starting in beginning of 2023. It does not look like it's going to happen soon unless these protests do put pressure on the Chinese officials to loosen restrictions. So very interesting indeed to see this news play out as we'll watch it carefully. But likely that's going to weigh on silver, which means that it provides an opportunity, because once manufacturing picks up again in China, likely we'll see demand rise for it on the industrial side, and that could drive the price higher during that time. So we'll see how it plays out. But nonetheless, it's during times like this, whenever there's a dramatic drop, we have to weigh on what the bullion products to buy at a good price. And likely we will see demand continue to rise for bullion products. And if that does happen, we will see premiums continue to increase. So right now, as I record this video, from the very moment, it has now dropped below $21 yet again. And so pretty dramatic and volatility in the silver market. When gold is down slightly, it is down not nearly as much as silver is. What is the gold to silver ratio now? 83.31, widening yet again, providing an opportunity for those who might be in the market to buy, but check to find the best deals you can on silver. And this is the time to do it if you have discretionary income. We'll see how this plays out as the week goes on. But very volatile with silver. I'm glad I'm holding it. I'm glad I have it. I'm glad I'm not selling it. And I think it's good to bargain hunt from time to time if you're in that market. But again, that's up to you. You make your own decisions on when to buy and how to buy your silver. But nonetheless, it's up to the individual, and it's just fascinating to see these prices. But this is a classic example of why spot price matters and why it's important to watch these markets. Because if you can save 55 cents on an ounce in one day, that's not bad. Somewhere thereabouts, but likely, it's not going to be that much. But yeah, so we'll see. We'll keep on pressing on, but where will the markets go from here? It just depends on how things play out in China and with the dollar and with the interest rates. Going back to what the Fed said about interest rates, I see this as just kind of noise of what Ballard and Williams had said. A long way to go to fight inflation, yes, but it's a very delicate situation. With employment, we're starting to hear about layoffs in places like Twitter and some other tech organizations. And likely the labor market will weigh in as to what the Fed is going to do. I believe they'll be more dovish down the road, and they may actually pivot And that pivot could mean that they would move down to a quarter-point rate hike after the December. We'll see. Because the loss of jobs and higher unemployment rates do not bode well. People want to be employed. Well, at least some do. There's still a lot of people that are still not employed and have not entered the workforce, and that has contributed greatly to the supply chain problems. Nonetheless, there you have it. Silver. It's taken a beating today. Will it continue tomorrow? We'll find out. We'll certainly see and watch the markets. But until then, just keep on pressing on. As silver stackers, we must be used to this. We must be tough through these times whenever silver takes a beating like this, and do not operate out of fear when you're buying and or selling. So the best thing to do, I think, during these times is just to hang tight, watch the markets, look for opportunities when you can, and don't panic sell and don't panic buy. So there you have it. Let me know what your thoughts are in the comment section below. Hope you found this video insightful. I'd like to extend a multitude of gratitude to all of you for taking the time to watch, and to encourage you to please rate this video. That means press that thumbs up button below, share it, comment, and subscribe.